Right, hello everybody. Welcome to the trading week ahead with Trend Signal. My name is Adrian Boothie, head of trading, and as ever, I'm joined with our chief analyst and chief executive, Jerry Miller. Hi, Jerry.
Hello there, Adrian. Hello, everyone.
Hello, hello. In the trading week ahead, we're just going to take a look at the main events that are coming up for the week, just so that traders are super planned. They know what to be looking out for, where the banana skins are, but actually maybe more importantly, where the real opportunities are, because it's these events that are going to stimulate movement in the markets for the coming week. So it's really important that traders know what we should be looking out for, what we should be avoiding, and what we should be jumping into. So what I'm going to do is move away from the slides for just a moment, and we're going to take a look at the economic calendar. So what don't we know yet about the markets? Let's find that out, shall we? So Jerry, do you want to take us through some of the events that are coming up and the important events for the week ahead, please?
Yeah, certainly. Obviously, Monday, the first day of the week, not a lot on the calendar. We've got Andrew Bailey, the governor of the Bank of England. That's not a name we have to get used to, actually, following Mr. Carney's departure. But I think a few people are starting to get used to his name. He's speaking at a LIBOR conference. There's no point in me explaining exactly what that is, but it's hosted by the Bank of England and the Federal Reserve. It happens at 4:30 this afternoon. It could give us a clue as to a move in UK rates, possibly. So sterling will be a little bit sensitive to anything that slips out, if you know what I mean, in any sort of Q&A session. But that's 4:30 this afternoon.
Interest rates are one of the main drivers for currencies, aren't they? So anything that is likely to affect interest rates is going to have a big impact on the movement of currencies. So that's well worth, for Forex traders in particular, or sterling traders in particular, well worth having a look out for that one.
Yeah. There is a bit of Chinese data out tomorrow, but it's really nothing like as important as the data at the end of the week or on Thursday with the GDP, but I'll get to that in a second. But the thing we're interested in tomorrow is the monthly GDP data from the UK. Lockdown measures started to be eased in towards the end of May. In certain aspects, certainly. So you should start to see an improvement in the May data. Now, you might be thinking, well, hang on a second, Jay, it's July, aren't you talking about June? No, it takes roughly 40 days to collate the monthly GDP data. It's not something we used to look at before. They only started releasing monthly data about a year or so ago. So we're not normally used to the quarterly data, but monthly data, same thing with quarterly data. It's 40 days after the end of that period that the data is available. So we're going to know what's been happening in May. And you might think, well, surely June's more important. Well, it is, but it'll give us an idea about how well the UK is recovering. So sterling will be sensitive to that, Adrian, on Tuesday.
Yeah. So, of course, April, we had a significant contraction, 20.4%, but we're expecting 5% sort of growth back, which is, of course, positive, but it's only a quarter of what we fell by. So we need a decent move back up, don't we? Or actually, probably less than a quarter, because it's up 5% of the lower number. But in any case, positive.
It's positive. My suspicions are it might be better than that 5% number. That 20.4%.
We saw a lot of the PMI data coming in as better than expected, didn't we, over that period of time, didn't we, in May? So
yeah. That would be my guess. In the afternoon, Tuesday, we got inflation data. None is my comment on that, i.e. no inflation whatsoever. We saw the PPI data. If you click on the week before, Adrian, you can see that the producer price index from the previous Friday, so that came out as an astonishingly weak number. And this is an important sort of observation, because not many people follow PPI, but it stands for the producer price index. And if you think about a factory, it produces cars, and the cars are sold, whether they go up and down in price affects the retail price index, but it's the cost of those goods that go into making those cars, so the sheet metal, the electronics and everything else, and those costs are falling, then it means that there's very little chance of the end product rising in price, if you know what I mean. So there's inflation, the lack of inflation is a concern for central banks. So this isn't necessarily a positive development, having very low inflation, but the fact is that that's where we're at.
Of course, inflation is the primary mandate for central banks, really, isn't it, to control inflation and make sure it's within certain ranges. But of course, it's way lower than its typical range.
In every developed economy at the moment, the maintaining price stability is one of their mandates, along with fostering full employment. Maintaining price stability means not allowing prices to fall as much as allowing prices to rise. So it is a problem. And of course, you'd think flooding the market with dollars, with this QE, buying corporate bonds. I mean, they're literally just throwing the kitchen sink and every other kitchen appliance at it. So, at some stage, we could suffer the consequences of all this in the years to come with higher inflation. But as I've always said, in the short to medium term, do not worry about inflation. That's not the thing we should be focusing on. Okay, so that's the data. That's the rest of the data on Tuesday. On Wednesday, we got central banks this week and two central bank monthly policy meetings. On Wednesday, you got the Bank of Japan. We'll wake up Wednesday morning and it'll all have happened by then. The yen's obviously going to be sensitive, so sterling yen, euro yen, dollar yen. The COVID-19 infections are rising, and there's been a sudden spike in infections in Tokyo, and it's rather difficult to sort of gauge the decision here. Are they going to extend the measures already in place? I doubt it. They won't make any changes in rates, but they've got unlimited QE, which is extraordinary. I'd be surprised if they say anything that is going to weaken the yen. But maybe they'll come up with something else. An infinity plus QE. I don't know. Maybe that's silly. So there we go. That's one of the central bank meetings, and then we've got the Bank of Canada, so the Canadian rate decision. That's at 3 o'clock on Wednesday afternoon. CAD sensitive, so Canadian dollar sensitive, sorry. Unlikely to have any change, Adrian. The Canadians and the Bank of Canada, it tends to sort of take a very close keep a very close eye on what the Fed are doing. So they can't afford to make any unilateral move there. So we don't expect anything.
Crude oil inventories, though.
Oh, yeah, that's a good point.
We talked about crude oil in our Forex and Stock Market review earlier, didn't we? So that's likely to be relatively important because they're talking about changes in the supply, aren't we?
Well, that's right. Well, the crude oil inventories is just for WTI. You're right. There is OPEC a meeting on Wednesday, but that's to agree to cut or reverse some of the production cuts back in from April, where they cut 9.7 million barrels per day. That won't be reflected in any crude oil inventories in the short term, really. But I think the price of crude oil, whilst it does seem to be sort of tracking equities, I do think it's walking a tightrope, and I have a feeling that it is becoming increasingly vulnerable to another correction at some stage. But anyway, that's a possibility. But certainly the inventories, that really is a US domestic issue. But I wouldn't be surprised to see a bigger build in inventories in the coming weeks.
Yeah. Okay. And what about Thursday? A couple of bits Thursday.
Thursday, the big day of the week, really. First of all, certainly Far East markets are getting very optimistic, or wanting to be optimistic about the second quarter GDP growth in China. As you know, they went into lockdown very early on because that's where the thing started. So Wuhan and the Hubei province and the rest of like Beijing, etc., they're in lockdown in February, and of course they then relaxed their lockdowns in May and have been recovering ever since. So it'll be very interesting to see the rate of improvement, and we're looking at a 2.2 figure, and that will determine the mood of the markets when we come in on Thursday morning. So when we wake up, you'll know exactly what number has come out and the effects it's had on stock indices and the opening in the European morning. Ahead of the opening, we've also got claimant count, that's unemployment data or employment data here in the UK. It's released at 7 o'clock, as a lot of numbers are these days. Will be really interesting. There's a massive concern that as and when the furlough scheme is eventually finished with at the end of October, there is going to be a bit of a spike in redundancies, as the unemployment
There's
rate's going to
talk of
jump.
that starting to happening now, because if you have to go through a consultation period of about 30 days or something if you're going to make more than 20 people redundant. I can't remember the exact number of days, but certainly if you're going to make more than 100 people redundant, you've got to have a consultation period of 45 days. So these companies have been planning that for some time now. So the idea, the argument is that it's going to start to get more numbers trickling through as they conclude their consultation.
Yeah.
So
certainly, I think the retail sector, the offline, as it were, hospitality. I mean, let's face it, this is all about socializing. A lot of hospitality, and because we're not allowed to socialize, those particular sectors, the travel sector, tourism, hospitality, pubs, clubs, restaurants, bars, hotels, they may be opening, Adrian, but they can't have that many tables, so the covers, they do need to have sort of 70% sort of cover of their what they can achieve to break even. A lot of restaurants, so they're going to struggle. So I think the jury's out as to the extent of job redundancies, but yeah, I take your point that a lot of that planning and implementation is going on right now as we speak.
Smelly stuff. Okay. European interest rates, monetary policy statement on Thursday as well. So that's 12:45 with the statement at 1:30 as well. Probably the more important thing at 1:30, isn't it, Jerry?
Yeah, it is. It's the sort of the press conference is the thing that provides the sparks. We're not expecting anything in the previous month. If you recall, the asset purchase program, or QE as it's called, that is designed to provide extra liquidity and extra cash into the Eurozone economy. They increased the QE package by 600 billion euros, and that brings the total to 1.35 trillion. I mean, it's a huge number. And it sounds like they've just gone completely overboard, and quite a few analysts believe that they will never be able to spend 1.35 trillion euros buying sovereign paper. So anyway, but that's sort of by the by. We don't expect any change in rates, and I think the European Central Bank is going to want to see how the EU governments progress with their discussions on this 750 billion coronavirus recovery package. And this was proposed, golly, at the end of April or mid-April, was it, this year? So it's been a long time on the cards. And the problem with it, Adrian, is that, and this is going to be discussed on Friday, so I might just go through it. I'll just tell you what's happening on Friday. They're meeting in Brussels and they're trying to talk about, how this is going to be implemented. But you've got what's been dubbed there, I love the way they give them a moniker, Europe's frugal governments. So the frugal four are pushing for cuts to this planned recovery package. And why are they pushing for it? They're having to pay for it, but they're not going to benefit anything like as much as the southern member states. So the likes of Spain, Greece and Italy are going to be the biggest beneficiaries. And of course, they're keen to get the deal signed and put into action as soon as possible. So and I think the European Central Bank would like to see that agreement in place so they can raise the money, get it delivered to where it's needed.
Which are the frugal four? Just out of interest, I'm gonna put you on the spot here.
Holland, France. You have put me on the spot. I think Germany partly
Germany,
are.
right?
Well, Germany partly are, but remember Angela Merkel was she's a sort of big backer of it, but then again, I wouldn't describe her as a lame duck president, but she's the figurehead who's on her way out. So again, I wouldn't know who the fourth one is without guessing, and I don't want to guess, but it's the northern states, and it's obvious because they're a lot fiscally more solid, and they don't need the funds anything like as much as the South. Remember, Italy was in a recession before the pandemic, Adrian. So, and Spain has really suffered. Their tourism industry has been absolutely whacked, along with Greece as well. And Greece is really struggling with its very, very big deficit, and it's the number of bonds in circulation, etc.
Huge tourism issues and everything.
Correct. Yeah. So they need help pretty quickly, and the fact is they want other people to pay for it.
Okay. We've also this week sort of kicking off Q2 of the earnings season. That's going to be quite interesting because there's been sort of a ban on guidance from companies, really, hasn't there? And so this is going to be kind of like the sort of the main indication of how companies have done. And we've probably got less information than we've ever had before. So it's going to be quite hard to sort of price in what we're expecting, isn't it?
Yeah, I mean, it wasn't banned. It's just the fact that the regulator just said, well, it's impossible for these companies to be able to provide guidance because they don't know what's happening. They're not making the decisions to do what to protect themselves. They're having to follow the rules. So the lockdown was the lockdown, and it was not self-induced. It was caused by governments making decisions to put everyone into lockdown. So they can't really say how well they were going to do because they didn't know what sort of path that the lockdown was going to take. But
Yeah.
we have got what's called the second quarter earnings season kicking off. So that's at the second quarter ended at the end of June. It basically takes 4 or 5 weeks for them to get their stuff together. And the first to report are the banks, and they always are. So you've got the likes of Citigroup, JP Morgan, all the well-known names, Wells Fargo. They report on Tuesday, then Goldman Sachs, big investment bank, on Wednesday, then Morgan Stanley, Bank of America on Thursday. So there's some real big stuff, and they're normally, if the banks are doing well, it means the economy is doing well, and they're going to be pretty decent numbers. And the ones that are going to stick out as being very positive, according to the analysts, are Goldman Sachs and Morgan Stanley, because they're sort of this sort of big investment banking banks, and they are the ones that probably have done pretty well out of the trading revenues because that's what they do a lot of, and also the advisory fees for all the deals that are going on. So they'll probably be the ones that shine out, really. But you're right, market consensus, difficult to know, really. Very few companies have given any guidance since the pandemic hit. So it'd be interesting to see the reaction of the markets when the results do come out.
Yeah, I think that's right. I think we'll probably find it's going to be more important than it normally is this week, because don't get me wrong, it's important what the big companies report, but it's not necessarily a major feature for. I say this. I think it's more important this week than in previous quarters. Let's put it that way. That's what I'm trying to say.
I would say that is the case.
Yeah. Okay. I think that's pretty much it, Jerry. Am I right there?
You're right. Yep. That's it.
Good. Okay. Excellent. Well, that's the info for the trading week ahead, 13th of July to the 17th of July. So happy trading, everybody. Hope that helps you be prepared for the main events and the main potential stimulants of movement and volatility that are coming up. If you would like help with the trading strategy, if you'd like to learn more about how we trade here at Trendsil, our award-winning training programs, then please do tune in for one of our live trading events. Now, you'll see if you go to the webpage bit.ly/learnts, you can book yourself in for one of our live trading events. We'll teach you one of our favorite trading strategies, which is how we teach our foundation traders to pick up fantastic turning points on the FX, index, and commodity markets. So if you'd like to come along, here's that link again, bit.ly, so bit.ly/learnts. But otherwise, for myself and Jerry, have a fantastic week's trading, and hopefully we see you online next week as well. And bye-bye for now.